Hello guys, good morning. Um, Yesterday I shared analysis on Nasdaq, Euro, and DXY, but today I also want to look at GBPUSD for the reason that since, like I mentioned on the last video, I said that I'm looking at DXY so that I can use that as a confluence to know my directional bias in line with pairs that are against the dollar, and my pairs the pairs I look at that are against the dollar is the major currency pairs, which is Euro USD and GBP USD. So let's dive into what I see on GBP USD. Which time frame shall we start with? All right, let's start with this monthly time frame, right? So let me go over to 6 months. I think that will be the time frame for me to explain what I want to explain. Or rather still, let's move to FXCM. Now the reason why I'm moving to FXCM is because it's showing us a full chart, right? And we can actually see GBP USD has been bearish, massively bearish for years. Alright, so we are deleting everything here. Alright, so this is the 6 months time frame on the pound dollar. You can actually see the major swing points, this high, this low, this high. We showed it into premium, stood up and gave us a low because it was drawn to this major area, this major sell stop, which is our external low. Right, so we traded into that, swept it, and we put back into the 6 months daily range. So the 6 months daily range is this high and this low. Now it is called a dealing range because we are inside that swing point, these two swing points, this high and this low. So we have the premium and the discount. So with that we can tell where we want price, where we're anticipating price to be drawn to. Right. So now on the 6 months time frame, we have this fair value gap that price traded into. Right. We played around the fair value gap, filling up that inefficiency until we finally trade out of it, but did not go for this high. Right. So now the main focus that we're looking at will be right here. We have the sweep right here because this is like, you can actually see the candles we are arranging. So this candle will be what we are dealing with because we are inside this candle, right? We have already taken the buy stop, so we are going to anticipate if it wants to go to this sell stop when we go down to the lower time frame, right? So 3 months still on the range, the monthly time frame, this is it right here. So back to the monthly time frame. All right, so I'll be taking this off. We are done with that. So we'll be looking at what happened right here, this high, low, and then this current market structure, which is a range. So now I want us to look at this and what is happening right here. We can actually see that we swept this high and price was purging the high. All right. The reason why I'm extending this like this is for you to see that and for you to identify what is happening on that high. Okay, so we are ranging right here, and that started from July 2025. So this is the swing high, this is the swing low, the range that marked from the 6 months time frame. So we can actually see we have this high, this low, and then we traded higher to sweep that high, and that high was formed in January. So that is when the year started, right? This year, 2026. So the opening price of 2026, this is where we have it right here. All right, price opened here. Now the reason why I'm always marking the opening price is, like I said, for those that were in the mentorship, I shared a video concerning how to predict your candlestick delivery for the month, for the week, and for the year. And that starts off with marking your open, high, and low, like knowing for you to, like, we already know that all these candlesticks, every trading deals with the opening price. Price opened, market opened at this particular price. Market gave us the highest delivery at this particular price, which is based on time and price, right? at this particular day, what is the price that was given to us this day, right? The open, the high, the low, and then the close. The market always have to do these four things to give you the total pricing for the day, for the week, for the month. But the main focus that we're having is the week, the month, and the year. All right. So when it comes to the monthly time, when it comes to the yearly candlestick, we are focusing on the monthly time frame. When it comes to the monthly time frame, we're focusing on the weekly time frame. We're looking at the weekly candle. We're focusing on the daily candle. So all that is explained on the mentorship videos that I'm dropping on Telegram. So yeah, we talk about the opening price, which is the main focus, right? So price opened, we trade higher, so at previous year's high, and then we are now playing around this opening price, right? So we can now run down to the weekly time frame. This is the weekly time frame. You can see that this market was ranging, right? We go down to the daily time frame, and on the daily time frame, we are seeing some sort of structure being given to us, right? So we have high, we have low, we have high, and we have low. Right, let me use that. Let me use rectangle 2 to identify major swing points. This high, this low, this high, and then this low. So this low traded lower to sweep this low. Right? So let me just take that off. I don't like seeing all these things, too much drawings. All right, so we swept that low and we are still playing around this opening price. So now for us looking at this right now, we can actually see that price swept this low, and as we always do, we'll look for the area that's responsible to take that low. So price, they traced backwards into it, but what did it do? It traded into it, did not give us a confirmation to sell. You can actually see that on the day time frame, in which you will see that on the 4-hour time frame. We traded into it, came down, gave us a low because it failed to go below this low, and then boom, we swept it. So we've kicked that demand, that supply out of the way, and we did a sweep right here. Right, we swept that area and we traded into the premium pricing. All right, the premium pricing. This is the high, this is the low. This is the major high, this is the major low. Right, so we traded into the premium, right, because it did the first structure shift right here. Right, now we do also have a very clear understanding that price, after we swept this low, price retraced backwards into inefficiency and sold off, right? And then it returned back to it. But in this case, what it did was a sweep, not a structural break. You can actually see the next candle closed inside. So we are running down, and I think that was previous month high that is swept, yeah? So this is it, sweeping previous month high. So we are now running down to the 4-hour time frame to show confirmation, right? So now, what is responsible to take this high and also our previous month high, which has equal highs, biaxial liquidity pool, and also this high? We have this swing right here. So this was the swing that I showed you on the daily time frame, saying that it did not give us confirmation to short, right? We had this high, we have this low, we had this high, which was into the supply. We came back into the demand that is pushing the price higher. So price respected it, and it possibly trade higher to take this high and previous month high. So what is responsible to take out that previous month high? We have these areas of inefficiency that was given to us, and this week opened and starts to trade lower. We can actually see it giving us a bearish structure, filling up this area of buy side inefficiency. So we can now jump down into 2-hour time frame, right? So now what I'm looking for is Monday's trading, right? Like I said, Monday is what always gives us a structural bias. So this is where the market opened. We traded higher. This is now previous day's high. Delete this, thank you. We have previous day's high, which is Monday. We traded lower on Monday, and this is Monday's previous day's low. previous day low. Put that at the bottom. Now you got to see what Monday did. It gave us a high, a swing high, it gave us a swing low. Also taking this low, right, which broke this low right here from Friday. And what we have left behind was this fair value gap, which is where Tuesday we trace back into to continue the bearish structure, right? Because we have this high, we have this low, and we'll be anticipating a lower high, which tapped into the opening price of this year. So it's still a bearish structure, right? Though we're having an overall ranging market. But when we dive into the lower time frame, we are seeing some sort of structure that will give us an entry, right? So yeah. So since we have a bullish bias on XY, that means I'll be having a bearish bias on the euro and the pound. Now, for those who are day traders, right, this is a perfect trade for them to take, right? So as a day trader, you're looking at your daily time frame. From your daily time frame, you look at your 1 hour time frame, and then looking for entry, you're looking at 15 to 5 minutes time frame. So also paying attention to your sessions. So you can actually see this color right here. This is actually the Asian session. So I'm using an indicator right here. We have London, New York session. We have Asian range. And this AGFS watermark is what is displaying my brand right here. I'm gonna off that. My Asian range is on. So when I click it on, you can actually see it coming up. Sorry. Then the next thing I need to activate is my London and New York session right there. London, New York session. All right, so this day today opened. This is the Asian range trading upwards into the fair value gap that we saw on our 1 hour time frame, right? Our structure for day trading should be seen on the 1 hour time frame, right? So we trade, and then London opened. So when London opened, what actually happened? We violated this order block right here. Violated it. What is responsible to violate that? We're going to see a supply zone. So if I were to take my entry, I'm taking my entry from here, but my stop loss will be on this high because that is the swing high that we are having, right? So price trades into that entry, and then you can take your shot on London session targeting previous day's low, and then you're done for the day. You don't need to trade again. All right. Now London session is you focus on which country is London. London is in England, right? Like the British, right? So is in the European side, which is in Britain, right? So that is why it makes sense trading GBP on the London session. All right, so the sessions for trading is always London and New York. So if I want to trade the dollar, I can be focusing on New York session. All right, still focusing on London. All right, because I'm trading the pound. So yeah, pounds and euro. So yeah, so you can execute that trade for a day trade, and it's a very tight stop loss. I mean, you're on a 5 minutes time frame, right? I can take 0.1 lot size with my stop loss here, or 0.05 lot size, depending on your account balance, right? You take that shot, and then you target previous day's low, and then you're done for the day. You're actually done for the day. This is the 15 minutes time frame, and 15 minutes time frame, this is the order block that was violated when London opened. You can see the massive candle, like the engulfed candle. This is a very clear confirmation because you're having inefficiency. So you're expecting price to retrace back to the candle that was formed before the inefficiency. They have violated that order block. Price retrace into it. So the previous day's low. Bam. Also on yesterday trading, you can actually see everything happened on London session. Also Asian, London open right here. We traded higher, right? So did a little sweep on this high, so that's not our main concern. We traded higher, we came back down, and then we have liquidity pool right here. area of support, price retraced back, failed to go to this high. All right, so we can also be on the lower time frame looking for trade entry. All right, so for me, to be honest with you, I didn't see anything here for me to have a entry, right, even on the 15 minutes time frame. All right, because normally I'll be expecting that once it sweeps this low, it should return to this point for me to take a shot. But then it traded lower, New York opened, New York just delivered the price massively down, right, to this low right here. So Tuesday starts to trade lower. So if you are active on London session, that was a perfect trade for you, right? So why we are also waiting for New York session, and we'll see what will happen. And I do know that due to this, I know that this is not going to be valid because price was trading bearish into it, and based on it didn't give us a confirmation to go bullish. There was no bullish break of structure, right? This high still maintains its high. The only thing we had was a sweep, so that means price retraced backwards in order to take liquidity that it needs to sell off. All right, it needs liquidity to continue selling off. Because what comes to my mind is that January needs to maintain that high for the year. So are we expecting GBP to trade lower and be drawn to this low? That is our set stop because we have already taken our external high. So I'm expecting it to be drawn to our external low to go take that low. All right, so that is all I have for GBPUSD. So take care. All right, so let's go and look at Euro. I shared Euro on Facebook, right? I was actually expecting it to come to this other block right here for a short. So I don't know if it wants to use a fair value gap. I don't mind, but I'm still waiting for D, and that is during the New York session, right? I also marked out that of DXY. So if DXY should trade into here, I'm seeing this as a breaker block because we can see we trade high and we swept liquidity. Price violated it, so I'm seeing this as a breaker block. This fair value gap was responsible for that. So during New York, I'm still expecting if it will come down to the fair value gap and then take the trade to target this high, and this daily buy stop right there. Nasdaq, I talked about Nasdaq retracing to a 4-hour fair value gap. Today, right, if you watched yesterday's video, I said I was expecting to trade to a fair value gap today, which is right here, right? You can actually see it coming into that fair value gap, and that was on the daily time frame, right? So once it gets there around 3:30 p.m. Nigerian time or 2:30 p.m. Nigerian time, I'll be expecting a reaction from there, and we're looking for a short, and not expecting it to go to this high. Like I am expecting this high to stay protected. All right, so yeah, because this is a relative low. So that is all I have for you guys today. Take care and be safe. And don't forget to give me a like, a follow, subscribe. Drop your comments. I mean, you need to share your thoughts also. It is very important. It helps us communicate. All right, so take care and be safe.